For the last 11 days, Bitcoin has been rejected at the key 50% level. However, 5 weeks ago, it was at exactly the same price range of consolidation before the move to 70K. So what does this mean to Bitcoin and to cryptocurrencies as we enter that 11th day of rejection? Let's find out in today's video, along with looking at the cryptocurrencies themselves, and of course the stock markets and the real estate cycle. If you are new here, hit the subscribe button as the content we cover in today's video is updated on an almost daily basis here. Thanks again if you're a returning subscriber. You guys know the drill. All right, let's kick it off with a couple of quotes around this particular time in the market, at least how I see it. These are my favorite quotes, especially from Peter Lynch. The key to making money in stocks is not to get scared out of them. Obviously, we primarily focus on cryptocurrencies here, but it's a quote for investing in general, the way I see it anyway. The key to making money in investing is not to get scared out of it. And essentially, that's what we're seeing at this time in the market. If you're able to not get scared out of those positions, because essentially the entire market or the entire landscape in the financial world is to call a recession every single day, week, month, year. And we know from history that the markets typically go up. So like Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. So if we have that patience, I think we're going to see ourselves through this stage of the market cycle. And yes, there's plenty of people who have still been calling for a recession at this time. The same people calling for a recession in 2021, in 2022, in 2023, and now, of course, in 2024. Nonetheless, the markets have continued to go up. So that's what we're trading here. We are trading the markets. Speaking of which, what is the S&P doing at the moment? Well, here is your green line for August. And if we update the green line here with a little rally, that's essentially where we're up to. Just this move to the upside for the S&P and for the Nasdaq. Now, of course, I'm looking at the traditional markets because we need to get a picture of the entire landscape, not just Bitcoin, not just cryptocurrencies. There is more going on in the space as opposed to just some degenerate coins. We need to understand the entire landscape. So to me, what I think is going on is we're still going through this choppy period of the second half of the year before we get closer into November and December, where we get the election roughly around here, and then the final move into the end of the year, then leading into 2025. As you may recall, 2025 is potentially a pretty solid year historically for the stock markets, a very strong year. So if it is going to be a strong year, then this story that's playing out right now for quarter three is a fantastic story for that part of the market. Now, of course, no one has a crystal ball. It's just what we've seen in history. Definitely have invalidation levels to the downside in case things don't play out. But so far, as some of you have been following for many, many years now, things seem to be playing out relatively well, especially if we have that longer term view of the market. The markets are about transferring money from the impatient, definitely a lot of those in investing, to the patient. So I think we're in this choppy stage here. There's still going to be a little bit of fear and a lot of extreme fear through that journey into wherever that low forms for the stock market, and then things start to climb out of there. Next thing to look at is the VIX and how the VIX, the volatility index of the S&P 500, has basically fallen off a cliff. So it was a huge spike, everyone getting very, very worried that the VIX was about to explode and you're going to see some sort of recession. Just note, that was 2 weeks ago, and basically we haven't heard much of that since. And in fact, you've even seen Goldman Sachs change their recession odds from 25% down to 20% and potentially even 15%. So if you're giving a lot of crap to, I guess, YouTubers or X or any of these sort of analysts, I think these are the biggest grifters in the world. The banks, they have, in my opinion, almost zero idea. I think they get it wrong more than a lot of people that you might even be following on YouTube, which goes to say a lot for what the hell they actually do in their offices. I have absolutely no idea, but they basically change on the drop of a dime here, going from strong recession to now dropping off a recession. But if you see some of this data come out again to be worse for the economy, they'll probably increase their recession odds yet again. These are the sort of guys, all of these banks, all of these hedge funds, these big investment firms calling for a recession throughout 2022, calling for the S&P 500 to collapse, and it did the exact opposite. It kept going up. So let's just keep following the charts and having a look at some of those signals, which might suggest that we're going through a bit of a rocky patch in the medium term that then eventually might lead to some higher prices just based on the historic evidence and data here. So we went through that looking at the VIX, basically up and down. That's the volatility index. It's dropped off, meaning when this indicator hits the signal here at roughly 100, typically you see the stock market go up from that point. Hit the signal, stock market up. Hit the signal, stock market up. Doesn't look like much on this chart, but when you overlay it on the actual S&P 500, you can see pretty significant gains. Again, the signal went off, stock market up. Signal went off, stock market went up. We've got that signal again. Eventually, I think we're in that space where we'll see higher gains yet again. When you look at the percentages, the stock market forward positivity rate was 95% of the time across 3, 6, 9, and 12 months later after this signal. And what I'm looking at here on the chart is last week's move to the upside. Although it was a pretty strong close, a nice close at the high of the bar, above 50%, one concern I have is the volume drop off. Now, I'm not entirely worried about the drop off of the volume here. As we've looked at before, that is possible, still on the grind up. You see the volume dropping off. It did push a little higher here in the previous move to a new all-time high for the S&P 500. So that was back in April and May. And then it had another correction, and then we moved higher again. So it might come up, might test some highs again, maybe have a little correction, or we sort of move into something more like last year's seasonal pattern. Often they come in 2s, 3s, or 4s. It's not often that we get something like what we saw in April, where basically there was one sell-off and then it powered to another high. So I'm not getting overly excited here, but I'm not getting extremely fearful that this is the end and we're about to collapse. Or at least look to invalidation of my bull market thesis would be a breakdown of the old all-time high and the 50% level back at 15,700. A long way from that point at the moment. So let's just keep following the charts and have a look at how this Q3 plays out for August and September. Just about 13 or so, 12, 13 days to go for the month. There's heaps more happening in other markets which are affecting the stock markets as well. US dollar had a very weak close. So this is the weekly chart. We're doing a weekly roundup here on a Monday, basically Sunday for you guys in the US. Weak close underneath the previous support level here. You've got March, there's the low, and this has been the lowest weekly close going all the way back to January. Volumes dropped off, so we'll see what happens over the coming weeks, but as we've covered many times before on the channel, I think the US dollar is in a position to continue down. Exactly what we looked at in that big video here that I put up on Friday. So if you missed that, I'll leave a link to it at the end of this video. But this is looking at the US dollar over the course of the 18-year cycle. Here is the cycle, winner's curse phase. You guys have seen it many times before. This is what happens as we lead into the final peak before we go into a collapse. So everything is still on track for the move to the upside. It happens over months and probably a couple of years. The US dollar is weakening. You're going to see rallies back up and probably further moves to the downside. We've already seen rejection at 50% at 107. We've seen the next rejection at a lower high. We've seen another rejection. We've seen a rejection at the weakness. You see here on the weekly chart, off the 50%, rejected, and then crash back under 50%. So this is taking time to play out. That's just how the macro cycles work. On top of that, you now have strength in gold. Gold's broken out to a new all-time high, closed at a new all-time high price on the weekly chart as well. Taking a look at it on the daily, that was a really strong Friday. And of course, you're probably going to see a little bit of a correction here. But nonetheless, for the macro cycle in the second half of the real estate cycle, second half, your 7 years, the second half 7 year here, because you've got 14 years up, roughly 4 years down, real estate and the economic cycle. I have to repeat that every time because some people only think of it as a stock market or as Bitcoin, and that's not the case. We are looking at gold continuing up for this second half of the real estate cycle. Now, this thing is really, really interesting, and I'll go into it in further detail in future videos. So if you are interested into things around what happens to gold, what happens to the stock market in the second half of the real estate cycle, which is the best asset to invest in. Just looking at past data only, make sure you hit that like button and subscribe to the channel, as I'll go into this in future detail in a more succinct video. Here is your S&P overlaid over the top. And one thing I'll show for this video, which I find very, very interesting, if you bought the S&P at the absolute worst time in the previous cycle, so the exact top, all right, so we put this onto a percentage, and you bought this in October of 2007, there it is, there's the 0 point, and you bought the S&P at the exact top and you didn't buy gold, and you're able to hold, which is why I brought up old mate Warren Buffett. The market's about transferring money from the impatient to the patient. Yes, you had to endure a 53 or 57% correction on your S&P holding, maybe your ETF. However, right now, and from 2018, 2021, 2022, 2023, and 2024, you would be better off than holding gold. That's what I'll leave it at with. Even though you saw gold skyrocket, the S&P has still worked out to be better. Now, I'm going to leave it there. You can do further research on that in the meantime, but I'll come back to this in a future video and go into way more detail about assets to potentially buy around the tops, around the lows, so that you know where to put, or have a better idea of potentially where to put your profits. Because I don't want to give you any financial advice here. I just want to open your eyes to other asset classes and other ways to move your portfolio around at different stages in the cycle. From what I have now seen over the last several weeks, this is heavily reliant on Bitcoin for its reading. It's called the Crypto Fear and Greed Index, but I think it would be mostly, it'd be more accurate if it was called the Bitcoin Fear and Greed Index, because we saw that extreme fear come out on the reading when Bitcoin finally had its first dump and then that second dump in July. So we go back, there's July, then we had the next dump here in August, and those were the two times that we saw extreme fear, even though a lot of altcoins were dumping through May and then into June and obviously into July. The thing here is it seems like the sentiment is resetting here around the fear levels, and the Bitcoin crypto market is potentially still in a stealth phase. We'll have a look at that in just a second. But in terms of the short-term analysis, again, like I said in the intro, the rejections of the 50% level could be worrying if the shorter-term 50% is broken here at 55,900. So the failure here to get above 61.4 may mean that we come back to test somewhere around the lows here at 55 through to 57. And if that is broken down, then the next support levels are back at 53 to 54,800, back at these lows here, 54.6, 54.8. So ideally, we don't want to see Bitcoin, or ideally for the bulls, you don't want to see Bitcoin break down past, call it 56K for a round number. You got the previous low. If it does, then you're back into this zone here between 53 and 56. So that's the invalidation and the problem here with the continued lower highs and current lower lows. On the weekly chart, however, the prior week, we had a really good strong bounce out of that low, putting in a higher close, a green bar, you've got high volume, but then come last week that just closed, you got lowering volume and a red bar here. The beauty about this is, or at least the positive is, it's an inside, so lower highs, but higher lows, and an equal closing price on a weekly basis with the volume lowering as well. So there is some positive signs here for the bulls, but there is still no confirmation for either way, no confirmation for the bears or for the bulls, and that's why we're stuck in this trading range at the moment. The confirmation in the short term, daily to weekly, comes on a break of 61.5, breaks and closes, mind you, and then even stronger once it can close above the previous top at 62,700. So that's what the bulls need to see over this next week or two, basically towards the end of August. Now, it's not the end of the world because it could still hold out above 56 and 53, but the bears basically take much stronger control underneath 56,500. That's your previous swing bottom, that's your previous lows here of last week, and those closes under that 50% level of this current range would show far more weakness in that price chart. Now, if that's still making you quite fearful and you're not sure if you can hold on and be patient with the move to the upside, I think this chart will definitely help you. This is the even longer term view. This is the monthly bar chart, and many things that we've looked at here, and I'll mention two, maybe three things in particular, are the volume, so the volume profile for the move to the upside and the downside to hopefully identify whether we're having some strength or weakness for the bulls and the bears. The next thing is the stealth move with the average true range. And then the third thing, why not, let's throw it in, is the number of bars to the upside. So this will work in with the volume as well. So what we're seeing on the volume here, let's take the log off, put it on linear, plenty of volume still to the upside. And every time we get a red month, the volume has dropped off. Now, of course, August isn't finished, still 13 days to go. So this volume could creep up a little higher, but I wouldn't be too concerned with that unless the closing price is underneath May and July, essentially July. If it's between July and May, it just makes things a lot more confusing, and basically the trading range continues. If it's underneath July, that looks very, very weak. So keep an eye on that going into these last 13 days of the month. The reason that this volume wouldn't be too concerning is if the close happened much higher up on the bar, which would then reflect on the buyers coming into the market. So even though it would be red, you're getting a higher close on increased volume. So potentially the volumes like this, that would probably show that you're getting a lot more buyers coming in, and then it's just a matter of time until we're ready to see higher prices. So think of Warren Buffett's quote here. Think of Peter Lynch as well. One of the best hedge fund managers, if not the best hedge fund manager of the 80s, getting 20% a year or so. You guys can correct me in the comments. This is the sort of thing that you need patience for. So we looked at the volume, the number of bars. Looking at the bars here, we had 6 to the upside. At that time in March, you might remember that's where I was thinking this market might be getting pretty damn overheated. And there wasn't really too many signs that Bitcoin can run more than 6 months in a row in the same direction. We had one here at 7 months, but even that 7th month barely went any higher. So you can get to the 5th month, which was February. And if you sold out at February, you could just friggin' wait 2 to 3 months until you had that next low come in. Also, 2019, 6 months to the upside. Couldn't do it. 6 months back to the downside. Note this move here, we're at 5 months. Look at the months here to the downside where the volume basically drops off on the reds and picks up on the greens. So there was still a lot of buying action coming in. Of course, COVID happened, wiped out any single last seller entirely throughout Bitcoin and cryptos, and then it could not go back under those levels. And every single month after that was basically higher and higher and higher. Going back again, into 2016, 2017, several months in a row to the upside. Every time we had those red months come up, you can see the volume basically dropped off. And on these months, you had higher closes and higher close again back in that zone, and the volume was still high. So you could see the buyers coming back into the market. Smaller volume here, market turned around, and then boom, breaks out on high volume, basically running into that final peak. And that's where the sellers start to come in around these final tops here, the big whale sellers, or those sellers who can see that this thing is getting really, really overheated. So far, that volume profile hasn't changed. You're still seeing pretty good volume to the upside. And of course, I'm only looking at Bitstamp here. Now we could take the index volume as well. You can see the increased volume to the upside, still increased volume for the buyers here. And then the selling volume is still lower, comparatively speaking, to the move to the upside. So that big boom to the upside, all of these red bars, including if you wanted to in this whole correction, it's still lower volume than what the volume was on the way to the upside. So we've gone through the daily, gone through the weekly, we've looked at the monthly. The longer term still is weighing, at least in my analysis, weighing on the favor of the bulls. Now, there's one last thing I wanted to have a look at here, and that was the average true range on the daily chart here. And what typically happens, let's turn this off because there's too many numbers, is that the average true range starts to die off. This just means that the market loses interest. There is less trading going on a daily basis, and you start to get these really tight trading ranges, which makes it harder to determine what goes on a short-term basis, which then skews the market sentiment. People get fearful of any tiny moves, and it happens every single flipping time. Like this little bar here on the 15th of August, it was down 2%. Top to bottom was $3,500. Have a look at the reading from the 16th. Here is the reading on the 16th. It was at 27 and it went lower the following day. So people are still extremely fearful, although it's just basically day-to-day movements within a trading range of $50 to 60 something thousand dollars. So taking a look back over history as well for the average true range, you can see it happens multiple times where the average true range basically dies off. It finds a rough average point here. For example, 2019, 2020, you could say somewhere around $200 to $400-500 per day was a very small day. And when it hits those support levels on the average true range, often you'll see either some volatility come in, so a move to the upside or a quick move to the downside, and eventually you start to see the average true range pick up in size, which leads into those final peaks of the market. And then you get these extreme moves going from $200 a day all the way up to $4, $5, sometimes even $6,000 or $10,000 per day. And I suspect it's going to be the exact same thing this time. We're starting to find a baseline here, like what happened back in June, some sort of baseline around $1,800, $1,500, $2,000 per day. When that happens, then we might see some sort of volatility. Of course, the bulls are hoping to the upside and the bears are hoping to the downside. But nonetheless, watch out for the average true range. And when this thing starts to get to a previous level, then we'll start to see some volatility come back into the market. As for cryptocurrencies, where are they sitting? What does this mean to cryptos at the moment? Well, the total cryptocurrency market cap, excluding Bitcoin, ETH, and stablecoins, still getting rejected. 410 billion, closes above 410 billion is going to be the first start to the strength here. The next level, around 480 billion, which is the total 50% level. So basically from the low to the top. I'm on a weekly chart here, so some good volume came in at that low, which is a good sign. And of course, we can see a rejection, and the higher low would be the sign of strength to potentially lead it back above $410 billion. Now, you're going to want to be in the cryptos that are moving this market or potentially in a stronger position. Now, to find those stronger altcoins, I prefer to look at the alt versus the Bitcoin chart to see if they are gaining strength against Bitcoin. You're adding risk to your portfolio getting into altcoins. Therefore, why not go with something that is showing bigger gains or signs of strength against BTC as opposed to something that is weakening? Sol BTC still putting in higher lows here. Last week, not a great week to do any sort of analysis on. Lower highs, higher lows, trading range, volumes died off, market sentiments died off across the board. Ideally, closes above 50%, and these previous tops are going to be that strength for Solana. Otherwise, you'll need a rejection and then come back to test the lows again to really see if there is going to be some further strength for Sol in this next stage of the cycle. Now, this morning, I did a write-up of an altcoin here, Curve, just looking at some of the signs for a potential accumulation zone. However, there is no invalidation just yet. But if you want to have a read of that in further detail, because this video has gone on a bit too long, make sure you subscribe to the free Crypto and Economic Report, which you'll also get for free coming out tomorrow. And then you'll be able to recap all of the updates that I've shown here in Discord. So just subscribe over here. You'll get that come through on email. Then you can check out all of that free content there in Discord. I'm going to do more of those as well on email and on Discord. So on to ETH correction, a rally up here, potential failed rally. You know, you've come up here to $2,800. Last week hit $2,780 and closed lower. Ideally, close above $2,900. Nothing has changed here. The worst case scenario is a rejection here and then a correction back towards the lows here at 2,200. That would show up on the ETH BTC chart if there was further weakness on the ETH BTC chart. The moment it closed underneath that 50% level, so on the daily time frame here, you can see this particular swing, 50% again got rejected. So this rally out of the low, basically a dead cat bounce, has been rejected once. Now, here is the stuff for the bulls. A close above 50% and these previous tops at 4.6% going to be much stronger for the bulls and start to consolidate this move as a real rally and not just a dead cat bounce. The bears desperately want to see this as a dead cat bounce and further downside across the board, whether it's altcoins, whether it's Bitcoin. The bears definitely need to see this as a dead cat bounce and lower lows get put in. So know where your low formed on the 5th of August. So right now, Ethereum, slightly higher lows, lower high still forming, needs a little more strength here versus BTC, and hopefully that's going to come in the sign of Bitcoin potentially also strengthening, so they both move together, and ETH can close above $2,900 for that added sign of strength here. It's getting dicey. Sol Bitcoin is something we just looked at, and we'll recap Sol USD. Last week, again, closed above 50%. So it's bordering here at $137. Now, it's walking a fine line of keeping strength here, but nonetheless, following the chart, we've now got 1, 2, 3 closes above the 50% level. Again, trading ranges are probably the most difficult areas to trade in. And if you guys were around in the bear market, especially at the end of second half of 2022, first half of 2023, you'll know that those trading ranges sliced and diced a lot of portfolios because there is no clear direction of a trend. So if you want to make life easier for yourself, wait until you see a clear trend on the time frame that you are trading, just like the breakouts that we saw in late 2023. So although Bitcoin has been rejected multiple times now at the key 50% level over the last 11 days, it's still within a trading range and there's no clear signal for confirmation as yet. Stay tuned to the channel, hit the like and subscribe button if you're new, and I'll see you guys back here at the next video. Take care and peace out.